Results out from distribution and warehousing network this morning show a 9% fall in revenue to 3.6 billion rand for the year to June. Diluted headline earnings a share fell 40% to 45.6 cents. Of course, the company flagged these numbers in a trading update earlier this month. Joining me with more is Dawn CEO Derek Tod. Derek, the products you make and distribute place you really at the mercy of the economy, both in the consumer level and also in the industry level. So, I mean, it's not surprising that you have seen numbers coming off from last year.
That's quite correct, Stephen. The fundamental of it is we're in two areas where obviously the cycle has bottomed out in the last 2 years, and certainly we've gone into the business and made sure we are preparing for the next cycle.
We said the cycle has bottomed out, so that means we are actually in the upswing at this point, do you think, Derek?
There's tentative signs, certainly on the building side, that things are starting to move in a direction. And as far as infrastructure is concerned, that is the one that remains outstanding. A large part of this is in fact government spend, and we have to wait to see when those awards of those contracts are going to be made.
What do you think is holding up those contracts? Because I think most of the construction industry at this point is sitting back and waiting to see some of that infrastructure money starting to flow into the economy. Is there anything holding it up in particular? Is it going to be coming through this year?
I think certainly most of the jobs that are required to be undertaken have been quoted on and have been shelved at this point. It's just now a matter of awarding, and I think that awarding will come through once the municipalities and those civil bodies are in a position to actually make the spend that they need to do in this country.
And where does Dawn sit in the chain once that infrastructure money starts to flow in? Where are you positioned? Will you be getting it quite soon up the chain, or do you really need to wait for it to flow down to you?
We certainly will participate on the infrastructure businesses that we own almost immediately at a certain level, not the tertiary water lines, but certainly all the supplementary lines up to around 500 and 630 millimeter. The large bore infrastructure has been undertaken. Certain elements of that are already underway.
And of course, this has affected companies like DPI Plastic, Includon, Sangio Pipe. Those are the ones you pointed out. How about the other side where we have the consumer? Are you seeing any consumer spending at this stage, perhaps home renovations where they are putting in new toilets and new sanitary ware and stuff?
Certainly, from our point of view, our building-related companies have actually withstood the storm rather well. We've gone into the business, as I've mentioned to you, and restructured, but because of the brands that we own, certainly our capability of just-in-time delivery, we've certainly weathered the storm. But without question, there is definitely a tentative start on the new bond type building process to come.
Of course, we've also had the rand strengthening significantly over the past year, so that hurt you with the foreign exchange loss because you do have operations outside of South Africa across the continent. Also hurts you though with competition, I should imagine, because it does make imports a little bit cheaper. Have you been seeing that?
In fact, due to the lack of visibility and confidence in the market and the pressure on cash flows locally, in fact, some of our businesses have benefited, even though the rand has been strong. Certainly, the well-known brands that we own have benefited from that because the lack of visibility and the lack of funding.
Talking about brands like Cobra here.
Cobra, Val Potteries and the like. Those known brands seem to have made, in fact, Cobra and Iska, two of our tap companies, have actually had their best years ever.
Of course, you also talk about right sizing and cost savings and things in the numbers. To what extent has that helped to mitigate some of the pressure you're feeling at the moment?
Without question, it was absolutely necessary. We believe that we've taken the business down to a point where we have not cut the capacity to any bad point, but certainly we are ready and waiting for the cycle to change.
Derek, the outlook for the 2011 financial year, do you see much of the same? Do you think we are going to see that recovery gaining some traction?
Stephen, I believe that the remainder of this calendar year through to December will probably be much of the same, but certainly the financial side of it, the mortgages and the consumers leveraging, will probably start to express itself a bit better in the second half running to June 2011.